Welcome everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the financial markets using the Viper tools, you are absolutely in the right place. First, we've got to knock out our standard disclaimer. Let's take care of that. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade at your own sole discretion. All right, now that that's out of the way, our topic tonight is see how to make $500 in an hour or less. Very timely topic. Let's get over to screen one, where I have a YM chart teed up. Some of you are just visiting here, and so I'm going to take literally just like a minute to explain what you're looking at. I normally do this at the beginning of almost every webinar. We here at Viper and all our subscribers and members that have been with us sometimes for years, we trade intraday volatility, movement, price action of futures markets. The four markets we track are crude oil, gold, Russell, mini Dow. The latter two are equities. These are $5 per tick of movement. Gold and oil are $10 per tick of movement. Now, we are connected to a data feed from our broker for these instruments. So when you click on an instrument and it loads on this chart, you're getting a data feed from your broker. In this case, we're using a 4-range chart. So the rendering on the bar chart is in 4-range tick bars. We don't use time-based bars. We don't use minutes. We don't use 5 minutes. We don't use 30-minute guidance or any of that kind of stuff. Everything you need to trade is on this chart. You can see we have background colors, red, green, and an intermediate color. Bar colors, red and blue and yellow. We have these swings identified. We have the predictor that you can toggle on and off. That's the ovals, painting and support and resistance levels in real time. Of course, we have the bands, mid-band, 4 bands above, 4 bands below. We'll talk about how to use that for trading. Now, I'm here in California, so you can see on YM as an example, midnight Pacific time was right here. This is the beginning of the European trading session. You can see that the YM contract went into a very pronounced downtrend. So the one most important thing, and you've heard me say this in pretty much every webinar, is that we are what we call retracement traders. We look for pullbacks after a thrust in a trend move. And we're going to look at a lot of examples of those tonight, okay? But before you can even start thinking about what types of trades you're going to take, you need to know what kind of trend you're in. So generally speaking, markets are in one of 3 conditions. You are said to be either in a downtrend, where the market is obviously going down. We are looking to sell pullbacks into resistance. So when a market has a thrust in the down direction in a downtrend, we wait for the market to pull back to resistance, roll over, you might hear that term in the live room, roll over, and then continue in the direction of the trend. Conversely, if the market is in an uptrend, where you're getting a series of higher highs and higher lows, we are looking to be buyers in an uptrend, and we're looking to buy pullbacks into support. Here's some examples right here. Pullbacks into support. So at a very high level, that's in a nutshell, pretty much how we trade. Now, in between uptrends and downtrends, sometimes you might see a little bit of sideways price action where the market is trying to decide whether it wants to change trends, continue on down. This is where you might see things like double bottoms, triple bottoms, double tops, those kinds of things, where a market is looking to find support after a big sell-off like this. Likewise, at the top, sometimes the market will top out. There's no more buyers, there's no more buy programs to push it higher, and so then the sell programs and the sellers kick in and it reverses. Let's look at a couple more examples. This is overnight from this morning in the European trading session. Most of you know that the futures contracts trade, they open on Sunday afternoon at 3 o'clock Pacific. They pretty much trade continuously till close of the market at 1:15 on Friday, with intraday 15-minute pause period after the close, and then he reopened. So it's pretty much 24/5, 524. Here you see it was heading up, comes back in, some selling comes back in, we go back into a downtrend. So when you see, generally speaking, when you see green backgrounds and predominantly blue bars, and one of the main characteristics that you'll see in an uptrend is the mid-band and all the bands exhibit this sort of stair-stepping feature like this. So these are all visual, clues to I'm not going to do them all, but you see it's like a stair stepping up, right? And then of course the opposite happens when you go into a downtrend. So that all the bands start stair stepping down. In a downtrend, the background is red, predominant color of the bars is red. So here's some examples of short trades in a downtrend. Here's a little pullback right here. I'm going to do a couple of them for you. Here's a pullback right around the mid-band. We like that a lot. So the first step into becoming a successful futures trader is to know the market condition at any given time, because that dictates what types of trades you take, right? We said that we're getting long and uptrends, short and downtrends, and depending on the size of the range, we're trading either the long side, the short side, or both. Now let's skip forward to this morning at the market open, because that's the whole reason we're here, is to talk about how we're going to make at least $500 in the first hour of trading. You could say hour, hour and a half, 2 hours, whatever. And let's look at, let's do it. Here's the way I want to do it. I want to do it this way. Here is the way I like to do this, okay? And I'm going to do this on this chart. But the prep I'm going to show you, the preparation I'm showing you, is true on any chart in any any instrument. Now, here's what I want everybody to do. I want to do a couple of things here, and I'm going to put them. Man, I've been having trouble with this keyboard. I hope my typing can work here, because there's just like a couple of important things I want to share with you. Generally speaking, if you are sort of a beginner to intermediate trader, where you maybe have traded for a while, you're learning the system, you're sort of seeing trades, but you're maybe 50-50 on your hits, on your entries and your exits. You really want to trade, and this is one of the most important things to remember, one futures instrument. I want to tell everybody instrument. One. It doesn't matter which one it is. It doesn't matter which one it is. It can be YM. It can be any one of these ones that I show right here. Now, when I say this, I'm going to tell you a quick story, because I talked to a fella quite a bit this afternoon who called me up and offered some thanks. I had a discussion with him about a month ago, and he called me up. I think it was a quick Skype chat or something. And he says, Charles, I'll tell you what. I've been with you guys for a little while. I know the system. I can see the trade entries pretty good, but I just can't seem to just get any consistency to my trading. And I said, well, tell me what you're doing. He said, what are you looking at? I mean, what do your screens look like? He says, well, I've got YM up. I'm kind of watching, I got the Russell up. Then on another screen, I'm kind of watching oil a little bit. I think I have a gold chart over there too. And then tucked in the corner, I look at NASDAQ, because sometimes NASI leads, will lead the other markets. And so what I told him? Here's exactly what I told him. And he's one of the few people that actually listened to me. I can't tell you how many hundreds and hundreds of traders I've talked to over the years, and they just don't listen when you give them some simple advice. And here's what I said. I said, simplify. Simplify. Take everything off of your screens. Everything except for one chart. And then focus 100% of your focus on that one chart. Yeah, what was happening was, that's right, Lewis. I'm getting some feedback here that some of you might be experiencing the same thing. Is that at various stages of your development, it's very difficult to trade 2 instruments or more, especially 3, and 4 I'd say is almost undoable. Because here's what's going to happen. Here's what's going to happen. I'm going to give you some just real quick, and I'm going to show trades in a second. Just bear with me here, okay? I'm just going to do a quick example and explain why I'm telling you this. All right, here's an example where I'll put a couple of 3 charts up here. Okay? And they're all moving around in real time, right? And he had more than this. And I'll just do this real quick, and then I'll get back to the subject at hand. Okay, I'm trying to get crude oil to let it load on a second screen. All right, so here's what's going on. You're looking at YM. You're trying to take trades on YM, and maybe you're in the room and you hear some trade calls coming in. You're thinking about buying YM or selling YM, or you're looking to get in at YM. And then all of a sudden you turn around and you look at the Russell, and the Russell's doing something completely different. And you think you hear a call in there, it comes down the midband. You know you should have got it here. You want to fire a trade, you get in late. And then meanwhile, you're trying to look over here at the crude oil chart. Maybe you hear something crude oil call in there, and it was down here when it broke, and there was supposed to be a box, but you missed it, and so now you're chasing it. And I'm just giving you a 2-second example of how you can clutter your life to a point where you're not profitable. You're not going to be profitable doing this, I'm telling you. You've got to simplify your life. You've got to take that away, okay? But here's what I want you to do first. Pick one at a time and try to learn it. Some of you might in here, or listening on the recording, might be good at, you try the Russell, and you get really good at the Russell. For some reason, the Russell speaks to you. Then trade the Russell. That's your one chart, okay? Some of you might love crude. Some of you might get really good at YM. You put YM, you can't. It's almost like you can't take a loss. You hear a call, you see a trade, boom, you take it. Your win rate's huge on YM. For the fellow I'm talking about, it turned out to be YM. He experimented with like 4 or 5 different instruments. He wound up landing on YM, and that's his chosen instrument. That's what he trades. So the takeaway here is you really, 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 really want to simplify your life down to one chart. And here's how it's helped him. He said, I'll tell you what I did. I signed up for the One Up Trader evaluation account. And he said, in 10 days, I've traded just YM, just focusing on that in the morning, and I'm within $35 of getting funded. I have almost $3,000 in profit, and I'm going to get a $50,000 trading account, and it's probably going to be next week. So I'm not making that up. That was a conversation I had today. And, sometimes we focus on, we get involved with too many things. We extend ourselves out so far that we wind up missing trades to set up, but it could actually make us some money. All right, enough said about that. Let's come back over here. So what you want to do on your one chosen chart is you're going to have some prep time. In other words, you want to really go into a market and you want to prepare yourself for what the market's going to do that day. And here's how you do it. Let me come back to the beginning. Here we go. Now, here's 6:30 right here. But you want to start looking at the market at least 15 to 30 minutes ahead of time. Okay? Now, in this time zone here, and from 6:30 where the market opened, right here, all the way back to, say, about 6 o'clock, what was YM doing? I'm going to give you 3 choices. Okay? Up, you type in a U for an uptrend, D for a downtrend. So I'm referring to this area right here where my cursor is circuit. Basically from about 6 a.m. Pacific to about 6:30. 6 a.m. to 6:30. Was the market going U up, D down, or S for sideways? This area right here. We're not talking about, over here or over here. This is all like, 4 o'clock in the morning stuff. That's not relevant to what we're doing right now. We're looking right here. Up, down, or sideways? What was YM doing going into the 6:30 open that we could immediately notice on this chart? Good. Sideways. Yeah, very definitely sideways. So we're in some chop. And what we do, and this is just take you literally like 2 seconds, you take your horizontal line and you put one down, in the support area here like this, okay? And you take, this is in the pre-market, this is just a little bit of prep you need to do for trading, okay? And then you put a resistance line right here, the top of the range, see it? And now you're all set. This is one of the first things we do. Most of you know that, some of you don't. And it is said that we have an understanding that as long as the market remains inside of this range, we are said to be sideways. Okay? In order for it to go into a trend, the flip side of that is it's got to break out this way or it's got to break down this way. It can't stay in here forever. It's going to break one way or another. Okay? And we need to be prepared for that to happen. Now, in the beginning here, before we get into actual trade setups, so I'll get into those in just a second, I want for us all to watch, pretend we're watching the chart in real time, as if we're watching it all together this morning, and you tell me when you think it's broken out of the range. And when you do, if you think it's broken up, you're going to type in a U. If you think that it's broken down, you're going to type in a D. All right? Now here we go. I'm going to advance this chart in real time, and we're going to watch it together, and you're going to make the call when you think it's gone one direction or another out of the range. Here we go. Okay, let me advance it. You should be seeing the chart starting to move. Hold on, let me blow it up a little bit here. There we go. That's some big bars. That's good. That's a lot better. All right, it's just turning 6:30. I'm just starting to no, this is sideways, Lewis. This is flat sideways. Here's what we got to do. In sideways markets, just before we do this exercise, I want to show something. Don't be too concerned about putting your lines at support and resistance in perfect exact places. It's never going to be like that. There's going to be places where it's going to go a little bit, below it, and sometimes it'll go poke its head a little bit above it like that. Okay, a few ticks, a few bars, whatever. Sometimes it won't get, won't quite get there like that. Sometimes it falls a little short of support. You just want to put line. This is just sort of a guidance, a visual guidance for you to tell yourself this is pretty much in a range. I'm not really, if you're not a good range bound trader, you're not going to be trading this. Okay, and so our understanding is that as long as the bars remain pretty much in this area right here, a little bit above, a little bit below it, but more or less in this area, we have no trend. It is flat sideways. Okay? Now, when it breaks, we will see it break. And when you see it break up, you would type in a U. When you see it break down, you will type in a D. Ready? Here we go. Don't type anything. I'm just starting to move it, okay? All right, here we go. Okay, it's 6:30. Here we go. Okay, market just open. 6:31 coming up. Market open now. Market open. Okay, 6:31 coming up. Let me blow up the bars a little bit more. There's your 6:31 right there. Okay, just made the bars a little bit bigger for you. Everybody can see this clearly now. Okay, going to continue to advance to 6:32 a.m. Pacific. All right, I'm going to stop it right there. All right, out of all the people in here tonight, and we've got a great turnout, let me see how many Ds I got. I got 1, 2, 3, 4, 5, 6, about 11 or 12 Ds, which is a small fraction of all the people that are in here. There's a lot of people in here. You should have typed in a D. Some of you typed in a D when these bars formed right here. You were the early adopters, and you were right in here. Some of you typed a D when these bars formed right here. And you're absolutely right. That by that point, definitely you're past all support levels, right? It's D, down. The break was down, right? Some of you, even though we're down here, haven't typed in anything. So either you're not paying attention or you're not participating, which is fine either way, however you want to do it. This is the way you learn. Participating in interactive webinars is how you learn to make money. So the more you jump in and participate, the more money you're going to make. That's kind of what it comes down to. So that being said, we know we're looking for short trades, right? The trend is down now. We're looking for shorts. So now you type in S. I'm going to advance this a little bit more. And you type in an S when you see a short trade. Yeah, it wasn't up. I answered that question, Lewis. You were range bound and now you're down. Range bound, down. All right, I'm going to advance the chart and you type in an S where I'm helping you out. I'm telling you if there's a short trade. Ready? Okay, let me blow this up a little bit. This is all 631. 632. 632. All right, good. A couple of you typed in an S here when it got down into here, and I would say that's a negatory. That's a negatory. We're in the middle of a thrust. Now let me explain something, and this is really important. This is really important to your. Oh, hold on a second. Oh, some of you missed it. Okay, let me do that exercise again. Sorry, I think the screen might have been paused. Let me start that exercise one more time. My apologies. Here we go. Now I'm going to move it. My sincere apologies there. I thought I had the thing paused. Okay, here we go. Okay, here we go. I'm advancing it. So there's your 631. You're about a minute into the trading session. Still dropping. 632 coming up. Okay, there's 632 right on the button. Market's been open for 2 minutes. Okay. Okay, I'm going to pause it right there. Some of you typed in an S when these bars formed right in here. Now, I would say that's a borderline yes short trade entry. So just to be clear, especially if you're looking at this for the first time, when you're in a trend move, the thrust will be down in a downtrend. We said that. Okay, so this is all thrusting. One of the most important takeaways here is to not short in a thrust move. So if you short here, you short here, you short here, you should not be absolutely shorting here. And what happens is a lot of you have a mentality, I understand, I used to do this too, is that you're thinking it's down, you're not sure, you're convinced. Sure enough, you're convinced and you pull the trigger and you hit market short right at the bottom and it retraces right in your face, right? Okay, we gotta get away from doing that. Now, when we say retracement, the ideal condition is that the market would come up somewhere near the mid-band. This is the kinds of retracement and trends we like to take. We like to take longs and shorts more or less up in this area right here. Now, that being said, we have to realize that sometimes there are shallow retracements and deeper retracements. Sometimes it's going to go up into here. And this is sort of the little bit the key in the art of trading. It's easy to see sideways in trends. It's easy to see what the bars are doing. It's easy to do all that. The difficult part comes in, where do you pull the trigger on the retracement, right? Now, in the case of the short, we really, really would like to see these bars break this stealth line, break the number 2 line, and at least get up into here. Now, like I said, you could have boxed this and you would have gotten a short and it worked out for you, so that's okay. This is a little bit shallow, and the reason we say that is that with support being so close, it could break that, come down here, maybe get a scalp off for 6 or 8 ticks, and then blammo back in our face. So the way to deal with that then is to take your initial stop down close to your entry so you don't get bit. Yeah, with a tight stop, Daryl. That's right. Yeah, that's how you would handle that if you took the shallow box. Any box for that matter. You really want it to really not move too much against you. You know, it's okay if a bar closes or two, a couple ticks against you. You want to see some movement pretty quickly in your direction. Yeah, same for the uptrend. Right, exactly the same thing. In an uptrend, you want to see it pull back through the green stele, through line 6, and down into here to get long again. We'll look at those in a few seconds. All right, so that short worked out. That was a few you called that. That's good. It's a little bit shallow, but it was a trade, no question about it. Now let me advance the chart here. Now I have to say something about this, okay? This all occurred within the first 2 minutes of the market being open. All this movement occurred within 2 minutes of the market being open. And so, you know, I have to tell you, sometimes it's moving pretty fast, and it's hard to take those trades. It really is. Sometimes you got to wait at least 3 to 4 to 5 minutes before you start taking trades. So I'm not going to talk too much about how much money that trade made, because in all reality, that was a pretty hard one to take. Now, if you, for some reason, had boxed it way up here, or you took shorted a rollover here, or you had a box up in here somewhere and you caught the bulk of that short, well then, yeah, that was a pretty good trade. That was probably about, looks like about C350 to 4. It might have been as much as 50, 60 ticks. I could have been a most excellent short for you. Now, here we are at 635. Do we think the trend has changed? Yes or no? 15 seconds. I'm over here at 635. Has the trend changed? Yes or no? Just don't think about it. Just type in just put Y or N. Boom. Yes or no? Right here. 635. 634. Right in here. Yes or no? 9 seconds left. Type in an answer. You got to know, right? We got to know. We got to know. We got to look at these charts and we got to instantly know. We can't sit and say, oh, well, let me think about it. Let me get some yellow bars. Man, the thing's going to run away from you. You got to instantly know if it's changed. Right over here. Yes or no? Time's up. Yes. Now, how do we know? How do we know? Well, notice how you had a mid-band box that occurred right here. That if at the time you drew it, if you had only enabled shorts, you never got short, and the market never ever got back down to check the bottom. That's clue number 1. Clue number 2. You take out the swing to the left and put in a fresh swing high, and the bars turn blue and the background turns green. That's clue number 2. Clue number 3. It comes in here right back to almost exactly where it sat before when it broke up, and it sits here for about a minute and a half, right in here. See it? This was a buying opportunity. This was the retracement you were looking for when the trend changed, right here. This is where you look to get in, and I would bet money if you went back and looked at the live room at 635, we said to put a box on right there. We might have said to let it go either way, but I'm definitely sure we took the long. I'm fairly certain I got filled on the close of this bar right here, long. Everybody see that? Everybody see why we're doing that? Everybody see how that happened? Series of higher lows, lower highs. We're getting higher level of support. We never went back down to the bottom. The background is green. We're looking for long trades on bounces. Pull back, retraces for long bounces for a trade. Let's see what happened to this trade. When using question from Tom. When using the region box, what is your trade entry? Touch, plus, or close, or does it depend on the current conditions? For me personally, Tom, there's lots of. So here's for those of you that might be visiting or new. Over to the, and Gary's shown this a million times. He teaches this in his webinars, very, very detailed. There's a panel to the right, and it's called Object Trader. This is a semi-automated tool that we built. The most preferred method of entry is the region box, and that's why we say box that in. So what you do is you hit region box, you hit enter, it puts it in the box, and then you activate it long or short, or both. I personally use close outside the box only. Here's why. There are times when, like for instance, you know, if you drew this box and you turned on bar close, then depending on when you drew it, you'd be filled long on one of these bars right here, or here, anywhere in here, you would be filled long. Now, sometimes that's good because certainly an entry down here long is better than a fill way up here. I would agree with you. However, there are many, many times where you'll get filled inside of a region box like that, and then the market just rips and tanks in the other way, and you get crushed. The only way to do that, if you're going to get on a bar close inside of a region, you get long and it starts to break against you, is immediately close the position and get out. Or drag your stop up tighter. Your initial stop, so let's say it's 12 ticks down here, so your initial stop's sitting way down here, right? Somewhere. And it starts to move adversely against you, you pull it up tight so you only get popped for a few ticks. All right, now let's see what this long trade turned into. You ready? Let's go ahead and advance this chart and see what this long trade turned into. Okay, it's coming up. Pulling back. Coming up. Here we are at 6:36. We've been in the trade about a minute. Depending on your fill, minute and a half, 2 minutes. Coming up. Coming up. Coming all the way up. All the way up. All the way up. All the way up. What are these lines right here? Where are those yellow lines come from? Anybody? Where's it going? What the heck are these yellow lines? Anybody remember what those yellow lines are? The prior range. That's right. It was the opening range. That's exactly what it is. Exactly. Yeah. Perfect. Good. All right. We're coming up through it. And we're breaking through it. We're coming back up through it. We're breaking through it. All right. Now, when you see a stop out, when you see where you would get out of this long trade, you type in an S. Okay? I'm going to continue to advance the chart. You're going to tell me if you took this long trade, where would you have stopped out? It's still going. Type in an S when you think you're stopped. Okay, we're at 6:39. Been in the market about 5 minutes. Going to open this up. Now, for simplicity purposes, I'm going to remove the yellow lines. Everybody see that was the opening range. We all know that. Let's get those out of here. It's not relevant now. Remember, you're typing an S when you're stopping out. All right, I'm going to stop it. Okay, so here's what we want to do. Now this I can totally understand this. Okay, okay. So here's the deal. You're going to hear tight and loose stops in the room, and let me explain what those are. In the case of the long trade, generally speaking, your tight stops are going to be located right around the green stealth line in line 6. But you're going to want to fade it by a few ticks. Hold on. What do we mean by fade? Well, for a stop that was sitting right on line 6, one of these two bars got you. Okay. Even the stealth line would have got you on the close of that bar right there. However, if you were a couple of ticks behind it, none of these two bars did not get you, and you stayed in the whole way. Sometimes I'll put my stop as far down as close. When I get a good runner like this, almost down near the midband. And notice you're trailing it up. See how you're falling? See how the stealth and line 6 are hugging the price? Almost got you there. See right here? Almost got you right there. Didn't get it. Didn't get it. Didn't get it. And then it got you right up in here. So if you typed in an S when you saw these bars form, you were right. This is where you would have got out. Good. Now, how much was this trade worth? You got long on the close of that bar right there, and you got out right there. Let's do some quick math. And I'm assuming you didn't get the shorts. You missed all the shorts. The first 2-3 minutes, you didn't get any of that. You didn't get long in here. All you did was take this long trade. So you got filled around 70, 72-ish. and it went all the way up here to 47. What is that? 70, 75 ticks? 70, 75 ticks, something like that. Let's do some quick math. So how much is this long trade worth on YM? Let's say you made 75 ticks. How much is it worth? How much is YM? Do you remember at the beginning when I said the equities are worth how much a tick? So on one lot, how much would you make? One lot is one contract. How much? Yeah, $3.75. Exactly right. It's $5 a tick. Remember? So yeah, $3.75. $3.75 for one. Two lot. Oops. $7.50. Now let's say that your goal for the day was $500. Would you need to keep trading after this trade? Would you need to do any more trades after this trade right here? If your trading goal was $500. No, you would be done. In fact, if you were in a trading combine, say like the evaluation setup, and I'm going back to this for a reason, because remember my example from the trader that I talked to today? Let me just put this right here so this should be in the forefront of your mind, because you're trying to get the funded account, right? So for the 25K account, oops, let's just put this up here so we remember it, right? It's really important to remember. You want to get $1,500 net profit in 15 trading days. That is not necessarily consecutive. It can be spread out over weeks or months. But it has to be a total. They track the number of trading days that you take. And that means, all that means is you actively took a trade. One trade equals an active trading day. Okay? Now, if you bumped it up a little bit to the 50K account, it's double, of course. Everybody knows that. And you got to get 3,000 in 15 trading days. So really what we're saying here is net, you got to average about $200 a day, yes? Plus or minus. Some days are a little better, some days are a little worse. And for this one here, you got to be averaging how much? Yeah, about $100 a day, net. Now, if you traded one lot on here, or two lot, on a two lot trade, this one trade alone on YM, on two lot trade for this trade, you're halfway to getting your goal on the $25,000 account. Halfway with one trade. You'd be a quarter of the way on the $50,000 account. Now, that's a good question, Daryl. Now, here's the thing. We don't necessarily say for you to take the two lot the whole way. What does that mean? In our example here, if you took the two lot the whole way, you get the benefit of the whole 75 ticks on two full contracts. However, sometimes you'll hear in the live room, peel off your scalp here. What that means is that generally between 6 and 8 and 10 ticks, if you put two lot on, the way we teach it is you pull one contract off on a scalp and you trail the second one. So in that case, so you get one lot off at 10 ticks and you trail the stop on the other. And so the way that works is you take your initial stop of two contracts and you bring it in within 2 ticks of your entry. So now you got what's called a free trade. Right? Everybody sees that, right? So you scalp one, get it off 10 ticks, get your stop up to 2 ticks. Now, if this adversely moves against you and flips back here, you still netted 8 ticks. You can't lose. In this condition, you cannot lose. And then, of course, you trail your stop on the rest. Now, in that situation, for that trader, you would have netted 85 ticks. So times 5 is 4. Is that 4? 4.25? Yeah, 85 ticks. That'd be 4.25 for the guy, the trader who scalped and then had the runner. All right, so we got to kind of, I don't want everybody to. I didn't put this in here for us to all sit and sort of dwell on this, but this has to be kind of running in the backs of our heads. We have to have these little mini goals where we're saying, you know what, I want to make a couple $100 a day. I want to make $200-300 a day. So after 15 days, I've made, 3, 4, 5 grand, and I get a funded account. Paul, in the evaluation period for OneUp, it does not matter how many trades you take. That doesn't matter. You can take as many trades as you want. However, what is our saying that we always say about that? Everybody remember? Anybody remember what we say? I'll put it up here. Some of you are brand new, so you might not have heard this before. What we want to do is we want to make the most money with the least. And I'm going to emphasize that word. That's the most important word in this whole thing. A least amount of trades. If you're taking a ton of trades, who's making money? Are you making money? Or your broker making money? Broker making money or you making money? Well, it could be both if you're really nailing it, but the broker's making a lot more money too, huh? You give a lot more money to your broker. We make the most money within the least amount of trades. That's the way I look at it every morning. I really do. It's a healthy way to look at it. I'm going to go in and I'm going to take the best trades I can find, and I'm going to only take the ones that make the most sense until I come close to my goal, and then I'm going to stop. All right, now there is some other trades that set up here, and I don't want to run out of time. I want to cover a couple other trade setups. Now, this could be your one and done, and you could be done. But let's suppose, hypothetically, you missed it. Okay, you missed all of this. Here we are at 6:39, and now you're looking for some trades. You tell me when you see the next trade setup by typing in a T. I'm going to advance the chart. Here we go. You don't even have to say what it is. We know the trend is up and you're getting long. Okay, so that's a given. You're looking for a long trade setup. And remember what we look for in a long. So when you see a trade setup, you type in a T, and we know it's going to be long, right? Okay, here we go. We're at 640. 640 Pacific. Let me blow these bars up a little bit more here for you. There we go. Okay, that's good. Okay, coming up on 641 Pacific. Market's been open for about 10-11 minutes. Okay, here's some bars right here coming in. 641 coming up. $642. All right, I'm going to stop. Well, that wasn't very good. We didn't get, that wasn't good at all. We only had a very small handful of people catch this one. Let me see. 1, 2, 3, 4. It looks about a half a dozen folks. Okay, look. And I know some of you are just looking at it for the first time, so don't feel bad about this. It's perfectly okay. Here's what's going on. Is what we have to do is we have to use our trading eye to visualize when we see that a support level is being put in, like one was being put in right here. Can you see these lines that form? This is an indicator that we have that when a swing is established, it doesn't change until these lines remain in place until something changes. So visually speaking, this is the bottom of your box. Yes? Right? See how that's been established? See how it sat there for a while? Sat there for about a minute, minute and a half, just checking it. Now, where is the top of the box? Okay, I'm going to give you some choices. Is the top of the box here? We're going to call that A. Is the top of the box here? B. Or is the top of the box here? C. Here's the bottom of the box. We all see that. Everybody sees that. Bottom of the box is right there. Is the top of the box A? This is the region we're drawing to get long, right? And we're looking for a close above it. B or C? Ooh, we get some mixed answers coming in. Go ahead. I'll give you 10 seconds to type in an answer. A, B, or C. Where's the top of the box located in our example for this long trade setup on the YM retrace this morning at 6 a.m. Pacific? A, top of the box, B, or top of the box, C? I'll give you 5 more seconds. Type in a letter. No, you can't pick 2. You can't say A, B, C. That defeats the point of the exercise. You can't put multiple letters in there. All right. Okay, I need to move this along. It's B, right here. As soon as these bars formed right here, this is essentially your region box right here to get long, right there. See the bars forming? And some of you typed in T when it started to form these bars right here. The ones who were early adopters and saw it, you get the gold star for this one. Here's your region box long, and you would have been filled on most likely the close of this bar right here. One of these 2 bars would have actually got you long right here. Some of you didn't type in T for trade until the market was all the way up here. Now that's incorrect. You're too late. You're getting in late. What we need to do, if you're not seeing trades until it's late, is you've got to, hey, ciao Bella Maurizio, I see you just came in. You've been in here for a while. If you're not seeing trades until it's way up here, see by this point, people are scalping, people are getting out. You know, you're peeling a contract up off over here. You're not getting in. This is the thrust part of the move, okay? No, we call this out in real time. Yeah, we call this out in real time. In fact, I think I took that trade. All right, now let's advance this chart. I'm gonna almost run out of time. I want to show a couple other very important things. Okay, I was gonna go through another trend change thing, but I think I'm gonna skip that. Okay, I'm gonna go for typing in an S for a short entry. Okay, ready? I'm gonna advance the chart, and we're gonna do an exercise. We're gonna pretend we're looking at this all together. Real quick, I'm gonna show you. Okay, so this trade stopped out. You got the scalp off here, and then see how it came back through line 6 and stealth. So somewhere in here, the long trade, the second long trade on YM stopped out. So you're out of that, okay? Now I'm going to advance the chart, and you tell me when you think you see a short trade by typing in S. Ready? Okay, good. Here we go. Okay, now we're at 642, about 12 minutes into the market open. Okay, notice how we plow through the midband here. So that does not provide support. There was no trade here, just to let you know. No trade here. Even if you boxed it, you wouldn't have gotten one. You could draw any manner of boxes. It never went up. See that? We will, Herman. He's saying, can you put this on the web under the free webinars for us all to look at? Yeah, absolutely. I'll do that. Yeah, it's breaking support, Lynn. Some of you noticing that you got up here. You just checked a high right on the button at 59. You pull back. Now, what should have happened for trend continuation, just this visual thing here, you should have seen something like that, right? Hit, pull back a little bit, and then blammo, continuation to higher highs. That didn't happen. We come down here, we plow through the midband. We don't hold it. There's no box. We never got long here. Now we're seeing a red stealth and a background change. So our little eyes are poking up, and we're saying, "Ooh, Spidey sense said possible trend change afoot." Yes, possible trend change afoot. Here we go. Remember, you're typing in an S where you see a short trade entry. Okay, here we go. You're still at 642. $643. Blow the bars up a little bit bigger. Okay, there's your 643. Okay. Blow it up even bigger if you want it. Remember, when you see a short trade set up, all you got to do is type in S. The purpose of this exercise is for you to see the entries. You got to see the entries. We know we're shorting the market on retracements. Remember our discussion earlier, yes? We're shorting the market on retracements. All right. Some of you got that. Some of you didn't. All right. You did have a little bit of rollover there, but that trade didn't work out so good. Some of you typed in an S, and some of you typed in an S here, and that was actually correct. In the case here, let's talk about this for a second. Some of you typed in an S right here, and you did get a little bit of a short trade here. Depending on your fill, you might have got a scalp off, and then you got 2 ticks between break even. You did have another box form right here. If you had boxed this in for the short side, you never got filled. Right, you never got filled on that one. Okay, good. So, you had a couple of trades that you maybe scratched out a few ticks, maybe you broke even. All right, I'm going to advance the chart one more time here. And you're going to make one more trade call, and then we're going to wrap. One more trade call, and then we're going to wrap. Okay, here we go. In this case, you're going to type in L for long. Remember, we're retracement traders. We're going to type in L for long. Okay, I'm going to help you out. The background is turned green. Bars are blue. Come up to a swing here. So remember what we're looking for longs. Okay, I'm going to pause right here just for a second to help everybody out. We don't get long on thrusts. This is not where you get in. Okay, this is the thrust. How do you know it's the thrust? When the market's pushing in a given direction, up higher or down lower, this is said to be the thrust part of the move. And this is absolutely where we do not take trades. I understand some of you still do, and you get stopped out, and that's what we're trying to fix. Thrusts are not trade entries. They are profit-taking opportunities for traders who are already long or short from other levels. So you have to wait for a pullback. So that's a little tip, right? All right, well, you tell me when you see a pullback, so you type in an L for a long trade. Ready? Here we go. Okay, now we're at 7:09. It's coming up on 7:10 a.m. Pacific. Look at the location of the bars. That's your clue. Trend is up. Background's green. We're looking to what? Buy support, right? Buying support. 7-Eleven. Been sitting here for about 2 minutes. Sitting here for 2 minutes. Okay, I'm going to stop it. If you typed in an L up here, you're too late. Everybody sees that. You got to. One of the best things you can do for yourself is do market replay over and over and over again on your chosen instrument until you just instantly see these locations. Some of you were typing in L's as early as here. That was good. Some of you typed in L's when these bars formed right here. Some of you typed in L's when you were here. And some of you typed in L's, unfortunately, when you were up here. So if you typed in an L at any point with all these bars forming within the region box at the midband, that was correct. This was your entry right here. If you're up here, you're too late. The traders who are getting support here are already taking profits up here. You're scalping 10 ticks and getting out when you're buying in. Now let's see what this trade turns into. I'm going to advance this trade, and you tell me when it stops out. Okay? Here we go. You're going to type in an S when you think the trade finally stops out, the long trade that we got in here, and the scalps off at the 45 swing that we just took. Remember, you type in an S when that trade stops out. Okay, we're all the way at 714. Okay, well, remember, I'm going to go back down here and remind you what we said. We said if you take 2 contracts, your initial stop is 12 ticks below your entry. You're filled long on that bar right there. You go 12 ticks below there for your initial stop, which would be down here somewhere. Okay, somewhere down in that area right there. You pop your scalpy target here at 10 ticks. 1 contract comes off. The remaining stop comes to break even, 2 ticks behind break even, so it's sitting right here. When it starts to break up and move in your favor, you trail the stop. And by the way, Object Trader will do this for you. You can just set that all up and it'll do it automatically. But if you're manually doing it, remember line 6 and stealth. Line 6, line stealth. Line 6, stealth. Line 6 is finally breached right here. Stop out. Now, how much was this trade worth? Okay, let's not count any of the other trades. You missed all of them. You didn't wake up until 7 o'clock, and now you start looking at the market. You decide to get in. You pull the trigger on this one right here. So you're filled long at approximately 4:30, and you get out at I don't know, use a round number, 5:10 ish. That's 80 ticks. YM long trade. Plus 80 ticks. One lot, $400. 2 lot, $800. Let's say that you only took 1 lot and you took this 1 trade and you did it 10 days in a row. How much money would you make? Yeah, 4 bones, 4 Benjis. Let's say you take routinely in YM, you take 1 or 2 trades that total somewhere between, I don't know, 70 and 80 ticks, only on 1 lot, and you do that every day for 10 days. How much money did you make? 3 to 4 grand. That's right. So you would have not only qualified for the $25,000 account, you would qualify for the $50,000 account, and a little bit more than that, you probably qualify for the which is $6,000 would be the $100,000 account. Right. Mm-hmm. Yep. 10 days. 15 days, you'd be up about 6 grand. All right, let's do this. We're running way over here, but that's okay. We got a late start. Let's keep going. Let's keep going. Let's keep going. Let's keep going. All right, we'll do one more exercise on the short side. I'm going to do a rapid fire one. I'm going to do something a little bit different. I'm going to go real quick. Ready? Yeah, Paul, I can't. I'm already 10 minutes over here. I can't go back and recreate that. We'll have the recording posted in both the subscriber and the free area tomorrow morning. Okay, so you can go back and look at that. All right. I got to move forward because I got a bunch of other trades and I'm out of time. So just hang tight. All right. Here's what we're going to do. I'm going to help you out. There is another trend change. And it's going to change to short. Now I'm going to advance this chart, and there's going to be a series of short trade entries that appear in front of you. Whenever you see them, you type in an S. Okay? Thrust, I'm going to help you out. It's going to be retracements to resistance are your entries, right? In the short condition. Yes. Okay, good. Ready? Here we go. Remember, you're typing, I'm going to go fairly quickly, and when you see a short trade, you're going to type in an S. Ready? Here we go. Okay, I'm going to help you out here. Trend is changing to down. We break support. Okay, I'm going to scrunch this up because it's getting a little out of control here. Remember, you're typing in an S when you see a retracement to resistance that you're shorting. Okay, keep going. Almost done. See, a lot of S's coming in here. Good, good, good. A lot of S's coming in. Lots and lots of S's. S, S, S. Daryl typed in about 10 S's. Good Lord. All right. Okay. All right. Okay. That's it. That's it. Good. Good. You're getting it. You're getting it. See how good this exercise is? Isn't this exercise good? You know what? I'll tell you what you could do. It's like muscle memory. It's like working out at the gym. If you just did this for 15 minutes every day, back and forth, back and forth, back and forth on the day. Look at the morning, look at the afternoon. Look at the morning, look at the afternoon. Just play it like you're playing it back and forth, like learning an instrument to play. You're learning an instrument. You're seeing some of you got all these right, all these right. The initial short entry was up here, but probably we didn't get that one because it was still unsure at the time it happened whether it was going to break down or not. Almost all of you got the first one, which was right here. Yeah, so that's a gimme. That's just a lob. That's just lobbing it up for you. A lot of you caught this one. I think almost all of you caught this one. This was a little easier because it stayed up here for a while. These are a little tougher when it comes bips up and then it rolls. You know, it bips up and rolls. So some of you typed all these retracements anywhere near the midband. These are all shorts. The overall move was 200 ticks from top to bottom when it's all said and done. All these were short entries. Every single retracement was a short entry. Some of you might have gotten in and rode the whole thing down. Some of you broke it into 4 or 5 different trades. Some of you took maybe 6. I think all in all there was like, how many legs? 1, 2, 3, 4, 5, 6, 7, arguably 8, maybe 8 or 9 legs altogether. Total move in the market, 200 ticks down. Now, if you were fortunate enough to catch this short at the top break of this box, and you trailed a loose stop, and you caught, or you broke it into three or 4 legs, the overall short was right around 200 ticks. So how much would one lot be worth if you caught the whole thing, or broke it into 3 or 4 pieces? And total net, you captured right around 200 ticks. Of course, less commission. So if you broke it into 3 or 4 legs, of course, there's more commission coming out. One continuous trade, you just have one commission to pay. What was that trade worth on a one lot? That's right, 10 bones, 100 bones, 10 bones. 2 lot. Now, remember the long trades we showed, all those trades earlier, long trades and everything, the 375, the 400, the 750. Let's say that you missed all that. You didn't get any of it. None of it. All this, you missed it. All these long trades, none of them. Missed. You slept in until 7:10. You wake up, you start looking at the chart right in here, and you see it went up, and it's starting to get lower highs. You're hearing in the room, we're saying, hey, look up, there's lower highs. It looks like it's going to break. You miss the first leg because you're still half asleep. You just got up, you're drinking your coffee. You just completely miss this leg. You just sit there like a deer in the headlights, staring at it, dropping like a stone. And then somebody in the room says, you know what? If that YM comes up anywhere near that mid-band and kisses anywhere near 59. Now, by the way, I remember saying those exact words in the room. Gary and I said those exact words in the room. If it comes anywhere near the mid-band, up around 50, 58, 59, 60, and it rolls over, we are getting short. We called this trade almost to the tick. This trade right here. We missed the first leg. You did too. You were asleep. Now, you got in right here. Like I said, depending on the tightness and looseness of your stops, you could have been punctuated into several trades and caught probably about 160 to 150 of the 200 tick move. So it would have been a little bit less than that. One lot would have been 750. But if you caught the 2 lot on the whole shot, $2,000, guess what? You would have qualified for the $25,000 account with that one trade. Now, granted, you'd have to trade 14 more days, but you'd have a little less pressure you have pressure taken off of you. In fact, you could lose $750 in 14 more days and still get funded. Yeah, that's right. Right? Okay, let's do this, and then we're going to wrap. Here's how this could work. I'm not suggesting you do this. I'm not telling you to do this. It's not what I'm advocating doing. But literally here's what could happen. On the first day of trading, you nail a couple of huge winners, and you're up. Let's just use a hypothetical number, just like this trade right here. You're up $2,000 in the first. Let's say the first day or two. Yeah, let's go back, say first day or two. First, oh geez, I'm messing this all up. First day or two. Hard. Hold on. You're up about $2,000. You pulled the trigger on, had some huge moves. You wrote them. You put 1 or 2 lots on. You just pick off these longs and shorts. You're up around $2,000. You've been trading for a couple of days. Now, on that 25K account, how much money do you have to make? I'm quizzing you now. How much money, how much net profit do you need to qualify for a fully funded $25,000 account? How much net profit? Anybody remember? If you're going for this, you got to know the number right off the top of your head. How much money do you need to make in 15 days? Tell me what to fill in here. I helped you out. I put the 1 in. How much money to get a $25,000 account in 15 trading days? We typed it in like less than a half an hour ago. $1,500. That's right. Now, in 1 or 2 days of trading, have you qualified for this account? Yes or no? Well, in the dollar part you have, but you haven't. You still have 13 more days to trade. Now, let's say hypothetically that what's 500 divided by 13? You could lose money for 13 more days. I'm not telling you to do this. And you should certainly try to make more than that and keep being profitable. Even if you pull the trigger and make $5 on a trade. You pull the trigger and make $10 on a trade. It doesn't matter. That counts as an active trading day. But you can lose, and if you lose less than $500, you still get funded. Isn't that a kick in the pants? That's a kick in the pants, isn't it? What I'm trying to say here is that, you don't have to take a lot of trades to get funded on these accounts and become profitable. And the beautiful thing about it is is that once you get funded, I'll show you what step number 2 is. And this is what you're going to really like a lot. This is going to put the happy face on you. After you get funded for the 25K account, how much money do you keep 100% of? That's right, Lynn. Some of you know right off the top of your head. You must be doing the program. This account right here that we pay for you when you sign up with us, we pay it for you. This is for you. You get $8,000 is yours. So once you get funded, what's your next goal? Once you get funded, what's your next goal? Right, to make the $8,000. That's your next goal, to make the $8,000 because you get 100% of it. Everybody see that? 3 contracts, $1,500 profit target. This one trade alone on YM could have got you there. You could actually lose money for the next 13 days as long as it's not more than $500 and you're still up a net of $1,500. You still get funded. I'm not saying it's a total cakewalk in the park and everybody's just slam dunk this in a couple of days. Markets move around. It's not going to be always like that. But it's not as complicated as everybody makes it out to be. I'm going to